Good afternoon, good evening. Doc Severson here with you, ready, set, live. Today is Wednesday, the 5th of August. Welcome aboard. Like to know, for those folks who are just joining us, where are you guys coming in from? Where on this planet are you accessing from? I myself am coming to you from Greenville, South Carolina. And the heat and the humidity, I love it. This is a great time of year. All right, we got Vaude coming in from Cincinnati, coming in number one there. Hey, Vaude, welcome aboard. Good to see you. Today, we've got some interesting things for you guys today. We're going to be going over the 5 points and trade of the day. David is coming in from Tennessee. We got Brian from New York, baby. John, I love the snow. Hello, in the UK. Awesome. That's great. And we have Gideon is coming in from Ghana, West Africa. We have a very international audience here today. So I'm glad you guys have taken out time. Let's see. David is coming in from Jacksonville, Florida. All right, everybody. Where are you going, Doc? All right. I am right here, man. I am here. All right. Let's get started with today's session. I'm going to go hide myself down here in the lower left-hand corner and get going. So again, today is the 5 points and trade of the day. So welcome to our live trade of the day. We run this on a weekly basis. Make sure you hit the notify bell so that you can join us right when it starts. And I was wondering if anybody has seen this flying grain silo that went off yesterday. It was one of the most interesting, bizarre, and exciting things that I've seen in a long time. This was called the 150-meter hop. This is SpaceX down in Boca Chica, Texas, which is down near Brownsville. And the thing just went straight up, gimbaled around. And you don't really get a sense for how big this thing is. I mean, that's literally, that thing was, I think, something like 50 tons of gear on one rocket. So flying up, landed on its legs, and we're one step closer to putting somebody on the moon, which is pretty cool. But you just had to laugh at the flying grain silo. All right, so today's session, solo silo. Today's session, we're going to be doing a few things here. We're going to come in, finish up near the half hour. Position sizing a small account with fractional shares. That engine could do 150 tons of thrust, no problem. I could use that on my car. That would be awesome. What's working with stocks? What's working with options? What's working with the crypto market? We'll go over the trade of the day, and then we'll finish up today with the Digitex Futures Exchange being live. We talked a little bit about it last week. We're going to talk a little bit more about it today. Anybody who's seen a copy of Mexico's check for the wall? All right, we're going to stay away from that one. All right, number one, position sizing with fractional shares. These are new for several retail brokers. We talked about this last week. Interactive, Schwab Stock Slices, Fidelity, Robinhood, and I'm sure more are coming out with this literally every day. Right? So fractional stock shares, this is the big thing, is the market gets inflated as the assets in the market get absolutely inflated due to all the quantitative easing and money printing and everything else going on out there for various reasons. It's getting to be really expensive. Hopefully you've seen Amazon is over $3,000 a share. Can you imagine that? $3,000 a share. So you're going to spend $300,000 to buy 100 shares. I don't think so. Don't think so unless you got a lot of jack, right? So that's great. But the number two cause of blown accounts, talked about number one last week, being that people don't put their exits in when they enter the position. But number two, right behind it with a bullet, is still trading positions too large for your account. So fractional shares will help this, but you still need to dial in the correct position size. That's what we're going to talk about a little bit today. So understand this, your position size is dependent on the risk that you want to take on the trade, which is tied into your account. But nobody teaches this stuff, right? This is the basic blocking and tackling of any investment. No one trade should put more than 2% of your account at risk. You can lose 2% and you're not even going to notice it, right? It's below your risk radar. It's going to be like, oh, well, that one didn't work out. It's not going to be, oh, crap, I'm going to lose sleep tonight thinking about how I should have taken that one off and things like that. You don't want to do that. You don't want to be trading emotionally. You don't want to be trading with regret. Trading below your risk radar will allow you to do that. Keep your position sizes small. No one trade should put more than 2% of your account at risk. So notice that I didn't say to use less than 2% of your account. That's what a lot of people misunderstand me in saying, hey, Doc, that's a little restrictive, keeping a 2% per. No, it's 2% risk per position. And there's a big difference there. So today's trade of the day went into something like this. And we'll bring this up in a little bit later, but we talked about $20 of risk for a $1,000 account. And we're going to set up a stop, which is $50 below where the current entry price is. So how do you do something like that, right? So if our entry is $450 a share and our stop is at $400 per share, let's say you had a $1,000 account. What position size should you use? What position size should you use for something like that? All right, so there'll be a quiz at the end of this. So the default answer for just about everybody that I've talked to is, I have $1,000 so I can buy 2 shares of Dexcom. $1,000, 450, so I've got $100 left so I can buy 2 shares. But that risks $50 times 2 shares if you're going to honor that stop down at 400. And that's $100. That's a 10% haircut on your account right off the bat, which is not going to kill you. But think about that. If you start out at $1,000, that's hard earned money. You probably had to save a lot, stuff things away to get that $1,000. And all of a sudden you got 10% less than that. That's not the direction that you want to be going. So that's a whole other issue that you're getting to trades that are stopping out, but that will happen, right? That will happen. Risk no more than 2% per position. That's $20 on a $1,000 account. So how do we size the position to risk no more than $20 with a stop point $50 lower than your entry? What we do here is for the $20 of risk, we're going to divide that by the $50 stop, which is the position risk. And then what we find is that we need 0.4 shares of DXCM for a $1,000 account. Not 2 shares, but 0.4 shares. Use fractional shares to limit your position to 0.4 shares of DXCM to limit your risk on the trade to no more than 2% of your account size. This is how you do it. It's not what you make, it's what you get to keep that counts. So it's not all these gains. I hear people talking about all the time, like, hey man, I'm knocking it out of the park. I'm making a shitload of money. And then you don't hear from them when they get clocked, right? All of a sudden they go really quiet. You don't hear from them anymore when things are not working out. It's not what you make, it's what you get to keep over time that counts. It's always risk management that is the difference between the professional and the amateur. Oh, by the way, the same concept works on crypto because we've been able to do this from day one with fractional coin size down to, 1 Satoshi size or whatever the broker will take. Number 2, we're going to move through these quickly. Number 2, what's working with the stock market right now? What's working in the stock market? So if you're investing in the stock market right now, the NASDAQ is the one that's attracting the capital. NASDAQ is leading everything higher. These are the previous highs. Right now we're at all-time highs on the NASDAQ. Today, yet another all-time high print on the NASDAQ. Okay, how much longer can this go? Look, I lived through the 99 bubble and it kept on going and going and going, and it didn't stop until the next year. We don't know when this is going to stop. You can say overbought, oversold, all that stuff as much as you want to, but it doesn't really matter what you think. It's whatever the price tells you that it's going to do. And what I'm seeing is that it's rested over the last couple of weeks right now, so we're ready for the next leg up. So look for candidates that are in the NASDAQ. So the key here, like AMD, which was the trade of the day a couple weeks ago, is to look for stocks in a base. And for those of you that understand chart patterns, this is an ascending triangle pattern. Ascending triangle pattern. So equal highs and a series of higher lows. Triangle pattern. The target for the triangle pattern like this, an ascending triangle pattern, is the distance of the open end. And that's extrapolated to the upside like this. And it's rough, right? It's just an extrapolation. It's just a rough guide. But it's pretty close to going into the next consolidation. The tighter the consolidation, the better. Markets move from range expansion to range contraction and then back again. That's all they do. Learn the 4 rules of fractal energy trading. So as we pointed out recently, most of the moves are happening in the Asian, which pass the baton off to the European markets. And then finally the US gets it later on. And then by that point, it's already rallied up. There's nowhere for it to go. So the US session has been for digesting the overnight gains. If there's any interest, if you guys let me know, I will build a scan. I'll show you guys how to build a scan to identify those candidates setting up in a base, and we'll go over that next week. So let me know on that. Otherwise, I'll keep those secrets to my members. Number 3, what's working in the options market? So we talked about the equities market. The options market is a derivative of that. So anything working in the equities market by extension should work in the options market. However, we do have some advantages here where we can trade non-movement. In the stock market, you have to trade things that move and move higher, unless you want to short things that move and move lower. But you can make money with things that don't move at all in the options market. So if 80% of the moves in the US equities market are happening after hours, then what's happening in the cash market? Well, it's range bound. This is today's price action. You can see this. This is overnight price action, which started last night. These are Eastern time numbers. This gets handed off to the Asian market. The Asian market grabs a baton, runs with it until it's finished, and then it hands it off to the European market, which pushed it up even further. And then by the time that we get it, which is here at 9:30, it's already done. The move is already done. Sometimes we do get a trend day from there where the US picks up the baton and runs with it. But lately, and this is since March, we have seen 80% of the gains that are occurring in the market are occurring overnight. And this is not only the indices, this is also with individual member stocks. Tea time, cheers. Okay, so we're getting these range-bound markets. This is called the opening range here, the first 30 minutes, and then we track the opening range. And so it's range-bound. So what can we do with something like that? Well, this is where options shine. With options, we can create positions to make money if the price stays range-bound for a short period of time. These are what's called 0 days to expiration trades. So today we were trading an option that expires today. What a great thing to sell, right? It's a great thing to sell. Imagine if you were an insurance company. Wouldn't it be cool if you could sell a policy that expires today, right? So after today, you have no more risk. You're just insuring your client for 1 day, not a month, not a year. You know, that's it today. And then you get to keep that policy after that, no claims. So this is what's called a 0 days to expiration, DTE, days to expiration, iron butterfly. An iron butterfly is the same thing as an iron condor, but we tight bond glue together the short strike prices. So we sell the options that are right at the money, which are the fastest decaying ones. And we look to, so this was today's trade. And you can see that you can make quite a bit on these things if you let them mature. I usually get in, get my fair share, and move on with my life. I don't want to be sitting in front of a screen all day long, right? So I don't want to exchange one job for another. I've already done the engineering jobs in my past. I don't want to do that again. I want to get on with life, right? So get your trading done, get your fair share, move along. Freedom is what it's all about. So we set up with a 1045 credit, which for one contract, that means you're bringing in $1,045 into your account, and then you decide how much of that you want to keep, right? It's like being an insurance company. It really is the same thing. So as the key is to filter out the trend days versus the range days. When I showed you back here was a range day. We've had plenty of trend days that come along and, they pivot and then they start to just trend and trend and trend and they just keep on going, right? We don't want to be selling a trade like this during a trend day. We want to pick the range day. So this is why we use the opening range to be able to gauge these things. So the important thing here is that when you're wrong, that you keep the losses small. So we're running about 78% right now on our win rate, but the trade losses are relatively small compared to the trade profits, and that's what you got to do. This is called a profit factor, which is for every dollar we lose, we make $3.87 in profits. And that is what's important in today's market. Weed out the bad ones. They're going to happen, right? The losses will happen, but make sure that you keep the losses small when they occur so they don't blow up your account when they do occur. So this is all we all keep kind of saying the same thing, right? It's about risk management. Okay, number 4, what's working in the crypto market? What's working in the crypto market? Pretty much everything right now. We've been waiting for the last 2.5 years for this damn bear to get out of the way. And right now, everything is working. For the past 2-3 weeks or so, this has been a wild ride. This is great, right? So it's one of those for, my salute to you guys if you've worked your way through this thing, this 2.5 year bear market, right? Which is why we got into all kinds of different strategies like selling options and trading futures so you could make money on the movement and not necessarily just holding and hoping and hodling like everybody else. So a huge amount of potential energy is built up. This is the monthly chart on Bitcoin versus the US dollar. A huge amount of monthly energy is built up. This is a great big consolidation happening at the monthly chart. So this is why you feel like you're getting beat up and bashed. And it's actually, if you zoom out and see the macro patterns of what's happening, this is very normal. Okay. Belgian restaurant, don't know. So the problem here is if you're trading altcoins, a lot of people are like, oh, I want this to be 2017 again. So if you have your altcoin here and you're using BTC to buy into that, the problem is that if you remember 3rd grade math, BTC going up means that the overall equation is going to go down in value, right? So you want BTC to remain stable as possible, or maybe even slightly go down a little bit. And then your altcoin can realize some gains with this. But this is what's happening with things like Icon, is that Bitcoin going up means Icon has to go down versus that pair. So that's a poor choice of a reference currency for this. That's the problem. So purchase assets with USD or stablecoin if you can for now. And wait for BTC, Bitcoin, to base before you buy altcoins versus Bitcoin. Make sense? Okay, so don't chase. Never chase. Wait for the base. If you see a market going higher like this, never chase after it. This is where retail chases after the move, and then they get ground to dust through the consolidation. You got to hold through that. Don't chase after the base. Wait for the base to set up and then anticipate it. You got to be in it to win it, right? You got to be there when that thing breaks out, because sometimes these breakouts happen in the space of minutes and they can go for several percentage points. So anticipate the base, get yourself positioned, never chase after a breakout that's already occurred. So we're using a combination of fractal price action energy readings on the RSI Laguerre study to determine what's set up to go next. I'm going to briefly go over the trade of the day. We've already talked about it, which was Dexcom, right? And what I did was I just attached a little screenshot here just a couple of minutes before we started talking here today. So it's already broken out above 450 and is $5 above that. So that is, that's a trade of the day. We've already gotten past earnings on it, and it's got a high degree of energy for this. So there's a high probability of this thing continuing to break out from this base. What you'll find, guys, is that it doesn't matter whether you trade the equity markets or Forex or crypto or what have you. To me, it's just a price chart, and they all operate in about the same manner. They all operate in about the same manner. The only difference is when you get into things like cryptocurrency, when you get into things like Forex pairs, you have that funky denominator. You're not dollar, you're not using the dollar as your currency reference, which is about as stable as you're going to get these days. All right, number 5, Digitex has gone live. So when we talked last week, Digitex was just about to go live on Friday, and they finally did. So they've gone live. I don't know if you guys saw me part of their event. I got interviewed. I interviewed Adam as part of their event. That was kind of fun. It's been 2 long years of waiting for them to get to market with this, with a stable exchange. They finally did it. They teamed up the right set of developers. Digitex is the only crypto futures exchange with commission-free trading. Now, down the road, they may also bring on like S&P E-mini and NASDAQ futures as well, too. Imagine trading something like this. This is a game changer for most of these things with 0 fee commissions. So being able to scalp one tick in the futures markets without the friction of commissions is a huge advantage. And this is going to become another game changer when they finish the API and connect this with bots, because one of the biggest things about bots, other than the fact that they continue to buy in a bear market, is that bots, oftentimes just the fees and the commissions are just not overcome with some of the profits that you take with a bot. So this is what the interface looks like. This is just a screenshot. This is not a live shot because I'd have to go through a VPN to do this. But if you want to buy something, you're going to be hitting the bids down here. So limit orders on the bids. If you want to go long, if you want to sell something, whether or not it's selling existing inventory or just sell to open, you're going to be working the offer side. It's very different. This is called a ladder interface. Once you start using a ladder interface, you will wonder why the current crypto futures brokers are out there using those big green and red buy and sell buttons. It's the most archaic thing ever. You'll never do it again, right? So once you get used to something like this, it completely liberates your trading. You can go so much faster. And the fact that you can get in at the market and get out at the market at the same price without any fees for that is a game changer. Oftentimes with most exchanges, if you get in at one tick, you have to cover maybe 2 to 3 ticks before you've paid for your trade. So it just doesn't really pay to do any kind of scalping or any kind of short-term trading. You've got to have much higher gains to pay for the friction of what's happening. So this is extremely important. Okay. You can see things like time and sales. You've got the dome that's over here, the depth of market, those kind of things. And also you can put in, this is fairly new. You can put in market stops, which is important. So what you can do is essentially put in like a bracket order. If you go long down here, let's say that you went long at this price. And maybe your target for this is going to be somewhere up here. So you're going to put a sell order in up here. This is a sell limit. So I'll put sell limit up here for that. And then there's your current price of entry. And then down here, you're going to have a stop loss. So this is a stop market down here, stop market order. So this in effect creates your bracket. Now it's not one cancels other yet. So you have to go back and depending on which side gets filled, you got to go back and tear down the other side on a per trade basis. But this is so much faster than everything else that's out there. It will liberate your trading. Okay, let me know if you guys have any questions about this as I go through here. So by far, this is the easiest crypto futures interface to use that I've used yet. So crypto is kind of catching up to where the equities markets and like the equity index futures are, such as the S&P E-mini, the NASDAQ, the Russell, the mini Dow. Does Digitex have KYC? No, they do not. All you need is a VPN to set up an account. So that was the, if they did have KYC, I wouldn't be talking about them today. So I've had no trouble making profits with this. This is the easiest interface to make profits with that I've ever used. So unlike other crypto, so I've added a new module to my Futures Masterclass to address how to use the Digitex interface. And I want to show it to you guys right now. So I'm going to show you what we have built for this. So if you go to our website, this is a members view on the website. So Omnia members get access to all this stuff. And if you go down to the premium class archive, and if you go through the dozens of classes that we have all the way down here, you get to the futures class. And so we're going to access the futures class. I'm just going to show you guys a sneak peek as to what's in here. So I go through a very linear process in the futures trading masterclass, like what are futures? Why should you trade them? How do you trade them for a profit? Building a framework for a business framework, which is very important. Don't just get in and treat this like a Nintendo game. Defining your niche. Everybody needs to have their own edge and own niche. And then what I do is I kind of bolt on the fractal energy trading component for this to give you a system that you can run with right out the gate. And then we talk about risk management. And this is something that's extremely important, adapting to changes in volatility, because markets are always changing all the time. It seems like just when you get used to one market style and character, it changes on you, and then you have to learn to adapt. Why not learn to adapt from day one? And so what I've also done here is I've included several popular broker interfaces to show you how to trade crypto futures on them, like Prime XBT, BitMEX, Deribit, and here we go with Digitex. So Digitex, I've got the first module out. Part 2 is coming later on this week, and we'll show 3 different strategies for trading Digitex futures. So it's slightly different because it's so much faster and so much easier to trade that you have to, I have to show you guys different ways to trade it. And then we go into things like the trading mindset, because crypto trading is it can do a real cluster on your head. And then we have a program summary, and then I've got some addendum indicators here, like the RSI Laguerre study that you may have seen on some of our charts. So this is a great class. I mean, each one of these has got a PDF. So you've got a written report for how to do this, right? So defining your trading niche, like written report. There's also a video for these, or you can take an online quiz. So I think it's important to test your knowledge as you get through something like this. So the point of this module is to trade right? So each, like it's an electronic quiz that you can take and study to see how your progress is as you go through the class, which I think is very important. And these do get changed from time to time. So that's our futures trading masterclass. So I wanted to talk to you guys about this and show you what's out there. We haven't talked about it much at all. So what we're going to do is, for this class, if you go out to readysetcrypto.com/futures, if you use the code Digitex, the coupon code Digitex, you get 40% off. So we're going to do this just for a couple of days, just to encourage you guys to sign up for this class. I realize people don't like to buy subscriptions, they've been Sirius XM'd out and they're terrified of getting involved with a subscription. But I should note to you guys that if you sign up for Omnia, which is $79, all class materials, everything that you just saw in there is included with an Omnia subscription. So that is obviously the way to go. That's a no-brainer. But if you just want the class, there you go. Use coupon code Digitex at checkout, 40%, readysetcrypto.com/futures. That is only going to be out there for a couple of days. When I get this thing finished, discount goes away. Okay, for those of you that want tomorrow's trade of the day, instead of watching this thing and hearing about it later, you can go to readyset.trade, our equity service, /free, and get signed up. And then you're part of our Discord for free. You know, we're not going to spam you. We're not going to pound on you or anything like that. It's a really cool service for free that you can hang out with us and ask us questions. And, you know, if you want to join us, great. If you don't, just hang out for the Discord. Okay, any questions, let me know. We're coming in right on time here, half past the hour. Make sure you hit that site, readysetcrypto.com/futures with that coupon code Digitex. It should be 40% off. It should be 40% off, Frank. Okay, any other questions? If there are any questions, you can always email us at support@readysetcrypto.com. Support@readysetcrypto.com. All right, guys, thank you very much. Thanks, everybody. And I will see you next week, and we'll do this again. We'll do another top 5 and trade of the day. You guys have a great week. Enjoy yourselves. Be profitable. Manage your risk. Adios, my friends.